All right, we're live with Brian Bandrowsky, who's the CEO of Secure Risk. Brian, what's going on?
Much. I appreciate you pronouncing the last name correctly. That's not an easy task for most people. So good
Nah,
job.
I got it. I got
Yeah.
it. Harder one to spell, easy to pronounce for me.
Yes. Yeah.
Yeah. So, as I said, Brian's the CEO of Secure Risk. We want to have him talk through the benefits of the group, how Secure Risk is different, but I think it's important for everyone to know your background. Can you
Sure.
take us through how you got to where you are today as the CEO?
Yeah. I started my insurance career with a non-standard auto company. I was doing customer service underwriting and then went into claims and I quit, went and traveled around Europe, was done with insurance. And then when I got back from Europe, I found that, well, the only thing I had experience in was insurance. I ended up looking at some opportunities, and rather than the carrier side, I found a good home and found my place on the independent agent side. I think there's some folks that fit well in the carrier, some fit well within agencies. I was with a good size agency as claims manager and then as their COO at the end until we sold. I was with them for 11 years. But joining as a claims manager really gave me the opportunity with background only 6 months in claims, mind
Yep.
you, and background only in non-standard auto. I was thrown to the fire, but it gave me the opportunity to read coverage forms and learn about every type of coverage pretty much out there and everything that's coming out up. So that was a good building block. We sold the agency in 2011. I joined Secure Risk. We had just changed the name from Shared Agency Services to Secure Risk at that time. January 2012, served as Chief Operating Officer. Our founder, Ray Williams, was Chief Executive Officer at the time. He stepped back to a more of a executive emeritus role January of 21.
Hmm.
So right in the middle of the pandemic, I was promoted to CEO and have been
Awesome.
serving in that role since.
It's maybe no coincidence you and Meredith both started in claims. She said the same thing as you. She's like, that's the best place to cut your teeth because you have to learn everything.
Yeah, it really is. And it's also from a standpoint of what I was doing, I don't know that I'd ever want to go back to it, but it's at the client's biggest time of need. So it can be stressful. You get into situations where, you're dealing with high level executives with large corporate entities that are agency insured. And then you're dealing on the next call with, a husband, and then 40 minutes later with the wife of said husband, and getting into the middle of, the same story, and the two of them don't communicate. But the point of all that is it's where the rubber meets the road in this business. It's what we're all out here selling. It's what drives this industry is unfortunately the need for
Mhm.
coverage in the event of a loss. So it was a good way to get not only thrown to the fire from learning coverages, but also to deal with customers in their time of need.
Awesome. So let's jump into Secure Risk a little bit. What would you say is the biggest differentiator between Secure Risk and any other group out there?
Secure Risk is we are a co-op. So in that a co-op, it is equal ownership. Rather than members, we have owners. Our agencies each equally own Secure Risk, and that is from the agency that's $1 million in revenue up to the agency that's over 150 million in revenue. We've got agencies a little bit over a billion in premium, and we've got some that are 10 to 20 million. Or I'd say our sweet spot's probably in that 20 to 50 million, but we've got some all shapes and sizes. The being a co-op, the agencies own us. We take direction from them. We're working for them at the end of the day. They're a true team with each other. So even if agency A doesn't support or work with partner A, they derive benefits from partnership A because of agency B's use of them, and vice versa with each of the agencies in the group. So inherently, there's more motivation to utilize and partner with our partners for these agencies because at the end of the day, they also share in the profits of Secure Risk. And obviously, our profits are derived from income from overrides from some of the companies, from dues, which are very minimal, and then a very tiny portion of profit sharing, which we end up paying out about 95% on a blended average of any contingency dollars that we get.
Awesome. So you're probably one of the few groups that actually does the co-op thing, right? So why?
Yeah, it is. And, I have conversations with a lot of agencies that are in other groups. I had one this morning. The barriers to exit are much often more important to look at than what's needed to enter some of these groups. Because what happens is in a lot of the groups, the agency decides they've outgrown it or it's not a fit and they're stuck. They're in a situation where contractually it's very difficult to leave. With us being a co-op, our goal is to do what's best for the agency. And if an agency leaves, generally it's going to be because they sold. It's not because they're unhappy. If it was an agency leaving because they're unhappy, I would say we weren't doing our job, which is obviously an issue. But I think, in a situation where we have had agencies leave when they sold, we cut them a check for their equity, basically give that back. We'll renew any policies they've written through our office for up to a year and continue to pay profit sharing. And that's that. They own their expirations. We have no barriers to exit, basically.
Awesome. So for an agency owner, the biggest benefit is it decision making? Like they're not trapped into things, they have a bigger say? Is it the profit sharing? What is the biggest benefit of being part of a co-op versus not?
I think for any group, the attractiveness generally starts with the contingencies and bonus income that's available. Where it does differentiate here, and I think where it is attractive here, is that the owners do have a say. They have a say in everything from who we partner with to how we partner with them. Oftentimes we'll partner with vendors, and what we try to do is just lower the costs to the agency rather than, in some cases, a group will derive some income back from a vendor partnership. We're just trying to get savings to the agencies however we can. We do a lot outside of just aggregation though, and I think that's where we really make a difference on the just knowledge sharing and the resources of these agencies that we've got in the group working together. When I came to Secure Risk at the time, we had just changed our name. It was Shared Agency Services. So it was SaaS, which SaaS means a lot of things, and it didn't mean a damn thing to the buying public. So it wasn't really going to help. So we had changed the name to Secure Risk, gives it a brand that, an agency, a small town USA can brand themselves as part of a larger entity, which in our case, we're close to $4.5 billion in premium. So that smaller agency has the resources that, a large national broker has, and they can still deliver the small local town service, a relationship. And, we're doing a lot of things for the agencies in terms of providing resources, risk management tools, leads. We've got an emerging leaders program, for instance, training education committee that's working on some partnerships to help. One of the biggest challenges we face in this industry right now is lack of talent and how we refresh and bring in new blood. And that's where we're trying to provide some tools for the agencies as they do that.
Yeah, Meredith mentioned the Emerging Leaders Program, and that seemed really cool. And the analogy I had is if you're trying to build a really great high school, varsity program, you got to start at the youth level. Then you
Right.
start to build all that up. And that seems like what you're doing. You're having the agency owners identify people that maybe are the perpetuation plan or people they
Yes.
see that could step into the president role at some point, right?
Yeah, absolutely. And the whole goal of it and the way they actually structure the partner that we're partnering with, the way the program is structured, it is designed for a future leader of that agency based on running an agency that is double the size of the agency they're currently in. So it factors in growth potential, and it's basically setting that individual up for success. We need that. We need to keep our agencies independent as much as we can. There's a lot of merger acquisition activity out there. It helps the carriers. It helps us, obviously, when our agencies can have a perpetuation plan in place and have somebody that can come in and take the reins. And we've seen a lot of that. And it's been, I hate to date myself, but I've been in this business and in this role specifically long enough to see, sons and daughters kind of take the lead, or that young producer that comes into an agency, starts growing a big book of business, and then buys the agency from the principal. Our current board chair is a great example of that. So it's always fun when you see that longevity and you see the ship kind of continue down the sea, so to speak.
Yeah. And I also heard that within your group, there's a lot of merger and acquisition between members, right? Because you
Yes.
have trust and you've built relationships with people who maybe you'd want to sell to or and actually believe that they're going to keep, the
Yeah.
ethics of
Yeah.
your agency alive.
Yeah, when I mentioned the shared knowledge, what I was getting at was the agency. The name of this company used to be shared agency services. And that was one of the things when I started, there was aggregation, there were resources, but the thing that really struck me coming from an agency was the shared knowledge. And we really strive to have our agencies partner. They're truly business partners with each other. So the more they get to know each other and know their peers, the better it is for them as they work together towards common goals, but also the better it is for them if there is acquisition or if an agency is looking to sell. We've built out a M&A catalog, if you will, where we were no different from any other group or any other area out there where there's still countless buyers out there that are constantly cold calling our agencies. We're not going to stop that, but our goal really was to raise awareness that, hey, if you're going to sell, you've gotten to this place in your career and your agency has grown to where it is, largely as a result of the partnership with Secure Risk and the peers within the group. So we think it's imperative that at least you owe a duty to your fellow peers to talk to them first and see if they can make a competitive offer. We've got agencies that are doing numbers of acquisition. We have got one agency that did 65 in 2 years. So we've got agencies that are actively recruiting or bringing in a new agency almost on a every other month basis. And we've also got just the smaller agency that can certainly provide an opportunity for a merger, if you will, where they can bring in an agency and a book of business where the producer or principal of that agency is retiring and doesn't have a perpetuation plan. This allows one of our agencies to grow in that way, as opposed to, obviously, they're out there trying to grow organically every day. But when there are acquisition opportunities, we want to look at those. And for the most part, it's worked out well. We've had our last 8 agencies that have all sold to another Secure Risk member agency.
Oh, amazing.
And we had talked at one point about if Secure Risk should directly get into the M&A game ourselves. We've got capital. We can go get capital. Do we want to be in a position, as some groups are, in terms of acquiring agencies ourselves? The problem that we saw with that is, one, it sets the price and it caps the value of an agency. If I'm an agency and I'm ready to sell and any prospective buyer outside my group knows that somebody else has a first right of refusal, how many bids am I going to get? To what extent is it going to get bid on? So I think it caps the price and the valuation somewhat. But more importantly for us is, we're then competing against our agencies because our agencies are looking to acquire. So why do we want to have a first right of refusal or try to buy an agency if our, one or 10 of our members might want to acquire that agency?
Right.
We really just try to facilitate those partnerships and acquisitions rather than get in the way. I think it's served us well, and it serves the agencies well, because I've been part of a very successful agency in my career, but we're not running an agency, so to speak, today.
Yeah.
So for us to go acquire one, we're kind of starting all over. And if an agency is already established and running well, then that's the perfect home for an agency to sell to.
For sure. One of the things I picked up on is it seems like Secure Risk does a very good job listening to its members. And maybe that comes from the board of directors structure that you have, or it comes from Meredith in operations kind of being a beast on her end. But it seems like you take your time making decisions for agents based on the feedback you're getting for them. That's something that, I guess, where did that come from?
I think, honestly, a lot of it comes just from the background personally for myself, and I'm sure Meredith, our vice president of marketing, Chris Dobbins, he's also involved largely with getting feedback from our agencies. It just comes from our backgrounds in roles in prior lives. With the claims experience, you're really having to kind of hear where that insured is. What are their needs? What are the pain points? How, at the end of the day, it's about helping your customer. In this case, it's how we best help our agency members. What are the pain points that they're having, whether it's hiring, staffing, training? We're trying to address those. Right now in the Georgia environment, we've got significant challenges with legislative issues, and we need tort reform. So we're very actively engaged in that. But we work in concert with the agencies. I think at the end of the day, there's strength in numbers, and we do our best to fill their needs as much as we can, and we're constantly listening to them because they constantly have new ideas. And that's also another positive of working with entrepreneurs is they think like an entrepreneur and how they want to grow, and they'll have ideas about their business their agency, but also their business secure risk because, as I said before, they're owners. So we take that feedback very seriously.
Awesome. Can you talk a little bit about the structure of your board of directors? Because that was cool to me, where you have terms and it doesn't necessarily matter the size of your agency or the quote unquote success financially.
Yeah.
Everyone kind of has an opportunity to get in there and be one of the directors of Secure Risk.
Yeah, we have 13 board members comprised of myself and then 12 of our agency principals from various agencies, and each serves a 4-year term in terms of the agencies, agency owners. It's really a good opportunity for us to get a cross section. So we've got a mix of urban, rural, large agency, small agency. It really, because we have so many different shapes and sizes of agencies, we want to make sure that everybody's well represented. So we try to get a good cross section in that regard. And I think what we find when we get someone on the board, in some cases, they get a newfound respect and level of understanding about some of the partnerships we have, some of the resources that we have, and frankly, some of the things that we can do better. So it's always great to get a new board member on. I think that rotation is critical to where we get fresh ideas. In some cases, there may be a contrarian opinion on something, and I always look at that as an opportunity to learn, get a different point of view on something, and perhaps there's a better way of doing something. And I think, again, going back to shared knowledge, that's what this is all about. It's a good board, so I'm happy with it.
That's awesome. Yeah, and having that, it seems like they can get feedback and you can have active conversations that then grow the group. And one of the things that from our end, we work with a bunch of different groups. There's ones that are obvious that take their time in partnerships and bringing the right vendors or what deals to the table. Then there's others that will take anybody. And from my experience with Secure Risk, you're on the side of let's survey the members, let's make sure this is something they want versus rolling things out. Can you talk a little bit about how you decide what you're going to bring to the table for members? Is it through the board of directors? Is it through gut instinct of what you see in the marketplace? Where does that come from?
So, when this organization started 30 years ago, it was, kind of a hodgepodge of, hey, what can we do together to save money or get better resources? And it's evolved over time where we are much more formal now. Meredith has brought a tremendous amount of organization and leadership to us in terms of setting up committees. We've got more engagement not only at the board level, but on a committee level to where we, one, want to listen to the needs, but two, we vet and then have a committee look at a new opportunity. If we have partnership right now, we've got 3 potential partnerships we're looking at. One's with a carrier, one's with a vendor, and one's with a wholesaler. And we've done our vetting. We've worked out a proposal, and then we go to the committee, because at the end of the day, the committee is made up by agencies who are going to be partnering as well. So we want to make sure that it's going to work. And in some cases, it may take a little bit longer to get a partnership done, but I would much rather, if we're going to invest the time and energy and also our agency's time and energy, I would want it to be a partnership that's going to make sense for everybody. We always look at it as a partnership's got to be a win-win-win. It's got to be a win for the party, the carrier, broker, vendor, whatever it is that's offering the partnership. It's got to be a benefit to the agencies and their clients, and it's got to be a benefit to Secure Risk, because otherwise, there's a lot of resources out there, and we're happy to share resources, but we just can't simply function and promote everything without some sort of benefit to Secure Risk and its members.
Gotcha. So what does the typical, member profile look like when you're looking at new agencies to join? You have different sizes of agents. It sounds like it's more of the agency owner that is the indicator of if they're going to be a good fit, but you could tell me if I'm wrong there.
No, it's a little bit of the agency itself, the book of business, if there's a good mix with our partners, but more importantly, is there an opportunity to grow with our partners? And, it's always helpful with an agency owner if they have a perpetuation plan. Do they have any youth? Do they have any diversity? Is it something that can come into the group and be here for the long term? And we want agencies that are going to buy in and truly be a partner. We've had agencies over the years that, and I think every group has this, there are agencies, and no disrespect to them, but there are agencies that join a group just to get more money. And at the end of the day, they're not necessarily on their end contributing more business. So they're just reaping rewards, not participating, and that ultimately gets nowhere for the group. It disenfranchises the carrier partners. So we want people who are going to lean into the organization and truly participate. So those are kinds of things that we look at when we're talking to an agency to kind of get what their buy-in is. How has the performance of their business been? Are they writing good, profitable business? Are they really have an understanding of the marketplace and coverages? Or is it an agent who's just simply out there throwing price at a client and not necessarily getting into some of the technicalities and nuances of what is actually needed? So I think most of our carriers, I think if you talk to them, would feel they would express an opinion that our agencies are probably a little bit above class in terms of the level of sophistication that they're providing for.
And what about access to members for other members? If, they're looking to get some advice or talk to someone who's been in the same market as them, is it pretty easy for other members to get in touch with peers in the group?
Oh yeah, we've got an online forum that a member can post out an inquiry or just a thought, if you will, and get feedback. But I think really what is the most effective tool is we have a couple meetings a year where we bring everybody together. And that's our agency owners, it's some of the key producers, it's our carriers, it's our vendors. And it's a couple days of education, but also networking, and relationships are forged. So there's a lot of times where I will get a question, a problem, whatever it might be that comes across my desk that I'm talking to one of our owners who's already talked to two or three of their peer owners because they're sharing common issues. And somebody's like, well, let's go to Brian or Meredith with this and see if they can help. Always open access, even though some of our agencies will compete with each other on accounts out there, especially when they're in Metro Atlanta. It's hard not to compete, but they still are sharing information. They're open to helping in any way they can. That's small agencies and large.
Nice. That's awesome to hear. You're a Yankees fan, right? No?
No, I'm a Braves fan. That's Willie Mays, but there's that's Glavine, Maddox, and Smoltz from the
Oh,
'90s.
really?
Yeah,
The trio. That's
yeah,
amazing.
yeah. I'm a big Braves fan, which in 21 was great, 95 was great, in other years.
Greg Maddux was my favorite. Whenever I would pitch in wiffle ball when I was a kid, it was
Yeah,
either Greg Maddux or Pedro. Those are the
yeah,
guys I would pick and try to emulate their
yeah. He was something else to watch. They just
right?
don't make them like that anymore. It's very rare to see a pitcher go 9 innings and throw under 100 pitches and do what Maddox would do
I'd be
routinely.
curious to know how he'd do now because obviously his velocity, he was like 89, 90 for a fastball.
Yeah, he was not. He was location. It was
Yeah,
location. It was deception. It was outthinking the hitter. Uh,
yeah,
I think he's one of the best ever to do it, and it was
definitely,
it was a lot of fun.
definitely.
Unfortunately, I'm a Cleveland Browns fan in football, so I try to hang on to the Braves as much as I can because my
Yeah,
football season is usually about 3 to 4 games, and then it's like
right. Hopes lost after that.
yeah.
So we could wrap this up on sort of, I guess, any other benefits that you see and things that you run into whenever you talk to an agent. If there's something that they're always worried about or they don't necessarily understand about Securisk and they have that aha moment when they talk to you, what are those usually when you have those conversations?
I mean, there's so many. Honestly, there's so much, I'll say, noise out there. An agency owner, a producer, myself, pretty much anybody in this industry are besieged with countless emails in their inbox that you can't even possibly try to get to all the information that's out there. What we try to remember and strive to remember is that our agencies are getting all that information too. And in some cases, they're not even aware. You got to kind of touch them 7 different ways, 7 different messaging opportunities to hopefully get somebody to retain something. But, in some cases, it may be a niche or a specialist on a wholesale side that one of our agencies didn't realize they had access to for a partner. It may be a situation where we can provide market access through our office and the agency gets full retail commission. And that's an aha moment where instead they're going through a broker wholesaler and getting less of a cut on the commission. We're also paying the contingency dollars. So, we try to look at it in every way that if an agency comes through us to place a piece of business with one of our partners, we want to do everything we can to foster that relationship to where potentially it may grow into a direct appointment. But most importantly, they're going to get paid as if they had a direct appointment.
Right.
So that's a very critical thing for some of our smaller agencies. I think for the most part, our agencies have a very good stable of companies, but there's always a company that somebody doesn't realize that we have as a
Right.
partnership. And especially with the rate that we're able to, with our staff, we're able to really kind of vet through a lot of opportunities. And again, it goes back to if the opportunity makes sense or not. But if the opportunities make sense, we're bringing on opportunities as they come. So it's constantly evolving. And in some cases, that makes it very challenging. We say we're herding cats all the time. So some of the agencies may not be aware and can't be aware of everything we're doing.
Right.
So there will always be something new. We've got our vice president of marketing, Chris, I mentioned, he meets with our agencies regularly. We have our meetings where we have our partners there. It's all about just messaging and trying to remind everybody of what we do, who we do it with, and how they can do it better.
Awesome. Sweet. So that's all the questions I have for you. Did a great job answering them. And
Oh, thanks.
yeah, I'm going to end the recording now and
Okay.
we can kind of go off the record for the rest of
Yeah,
it. But great job, man. That was awesome.
thanks.